Eddie Harvey here from TradeWithEd.com. Hey guys, I'm here with a EURCAD analysis breakdown, guys, from a trade I took on Wednesday. Today's Friday, it's the 19th, guys. I took this trade on Wednesday. I do a segment called What You Trading Wednesday, getting back into the swing and doing those. I would have had this recorded and out to you guys as of on Wednesday, but I got busy preparing for, I had shoulder surgery yesterday. So I apologize for the choppiness of my voice and everything related to the surgery. So definitely feeling a little bit better today. So I want to just get some content out to you guys. All right. So getting into it, I'm going to try to not make this video too long, guys, but I definitely want to just try to drop a little value on you guys on why I took this trade. So let's tap into it. I might talk a little fast, but that's why it's recorded. You can go back and watch at your pace. So here we are, guys, EURCAD. As you can see, this is the 1 hour chart. We're in a downtrend on EURCAD. For me, I do all of my markups off of the 1 hour and I enter off of the 15 or the 5 personally. So looking here, this is where everything started at with this section right here, where I had some nice market structure for. I trade break and retest. So for me, the foundation of that is having good market structure. And I'm looking for right here, consolidation. I have, multiple touches, a minimum 2 touches to the top, 2 touches to the bottom. We know that's what a double top, double bottom. I don't trade that, but that's the lead in to what I trade. And I look for a breakout and a retest and a rejection, then I enter. So it played out perfectly where I could have took that for a buy just off of this, right? You had this super long bearish candle that broke out, retested, came back to retest this zone, letting you know that this floor now became a newfound ceiling, and then it continued in the direction that it was in. The trend is your friend, right? So here we are. This is a downtrend, but I did not take this trade. I actually traded against the trend. Now, guys, I will tell you the trend is your friend. Like I said, trade with the trend. But in this case, I did trade against the trend, and I had, obviously several reasons why I did it, and I'm going to share with you all those reasons. So if you look right here, price dropped down. It came here and created this newfound level of support. This was a lower low, as you can see here, right? Price came down, created this lower low because we had what up here? This is a high, right? We had a high here. Then you can go here and say it created, even in this area, a low, right? Lower high, lower low, lower high, lower low. Okay, boom, lower low created there. Then we had the big bullish engulfing candle that came here, which indicated to us that this is a possible reversal. That trend was possibly going to change, or it was either going to be a reversal or simply a correction in the market, and then price will continue in the direction that it was originally going, which was bearish. And that's exactly what happened. But if you look right here, this level I had up here right here was still valid. This level, this buy level, right? This area for this buy. And now this is an area for a buy, part of my consolidation box. And if you look to the left, if you see right here, this is an area where it showed this is a strong resistance level. It was resistance once right here, it was support here. And if you keep looking, more resistance, right? So it was a strong level. Price came again, break and retest. Price came right here, it broke out. And now the first confirmation for me is on the 1 hour. I wait for a full 1 hour candle close of that zone, breakout of that zone before I even move forward. So if it would have pulled up and then rejected back down, like you see something, if it would do like a bearish candle here, or even this candle right here, that wouldn't have been enough for me to say, hey, I want to enter on for a potential buy right here. So price broke out. I would have liked to have seen it have an even bigger break like this bearish candle there right here, but this was cool. I was good with this, right? 1 hour close. This works for me. It closed out of the zone, right? Retested on the 7 o'clock hour, and that's like right around where I got in at. I got in around 7:45, 7:50. I entered on a price of 31.12, 31.13, and I took that up. I twin traded this trade. What does that mean? I took my order and I split it in half. So let's just say, for instance, if it's $1,000 account you're trading with, I didn't put in 2 lots. I split my lot size in half. So 2.05 lots is what you would trade if you're twin trading. right? Because if I'm doing 0.01 for every $100, right, to make sure I'm using proper risk and all of that good stuff, that's what I did. So I came in on my first order. I typically do a 1-to-1, sometimes a 1-to-2. I had, obviously, I was risking 2% of my account. I had a 30 pip stop loss and a 30 pip take profit on my first one, right? Bagged that order. And on my second order, my goal was 90 pips. So I was going for 1-and-3 on my second order. But did it get to that level? It did not. And I'm going to share with you why it didn't reach that level. So again, 31.12. Right in here, right? 31.12. Boom, took that up for bag 30. And it was pushing up, pushing up, pushing up. Got up here to about 50 pips. And then you see on that one candle, that was a long wick. So now price came up here, created this big wick and rejected and came back down, right? So that was indication to show that this was going to potentially be a strong area of a new area of resistance, okay? So, and also indicating that price was just in this area creating a lower high, okay? Because guess what? It did it here and it did it here. And I'm going to share with you what made me manually close out the second order. Obviously, these were indicators right here, but I'm going to give you more confirmation on why I chose that. All right. So now break and retest the basis of my strategy, right? But as you trade, right, you start shifting, adjusting, adding more to your strategy per se. And I've added a couple of indicators that have helped me get even more accurate trades and just be more solid in the market. And it's been working great for me. So I want to share those with you all versus, I will start with a clear chart and now we can talk about the indicators. So the first indicator, obviously, I'm trading against the trend. That was strike one, guys. You truly don't trade against the trend unless you know what you're doing. But I knew I was going for a certain amount of pips. And there's a reason I didn't get that 90 pip. Number one, I forgot for a second, I was trading, the trend was bearish, right? It was not a bullish trend. Had it been bullish, yes, that was a very good possibility. I would have got the 90 pips on my second order, okay? I know I would have got it, but this is a bearish trade, so I had to take what I was getting because I decided to go against the trend. Now, how I went bearish, right, how I traded with the trend, I would have easily got, look at that, I would have easily got 90 pips because after the move I took happened, price dropped all the way down for 130 potential pips with the trend. Okay, so let's take a look really quickly here at what indicators. The first one I like to use is Whole Sweet by Silico. I like this. It gives you like this taper line to show you that indicator of the trend being bullish or bearish. There are some other components to it where it'll like fill the area and everything. But I like just to have the strip here. So it's showing you right here that where the trend starts, where it's bearish on the 1 hour and it'll stand bearish. And then now you'll start seeing it changing, shifting to where now it was bullish. So I use these indicators to give me more areas of confluence to say, hey, you can get in for this trade for a buy or sell. So we have that Whole Sweet and Silico. So obviously, oh my gosh, sorry about that, guys. I forgot my arm was in a sling and moved it. Oh man, that was painful. So sorry to get off track there for a second. All right, so we have Whole Sweet and by Silico, but I combine that with the half trend, and I've nicknamed this double H, right? I nicknamed this double H because I'm using Whole Sweet and half trend. So you see the half trend right here. You see if I take Whole Sweet out, you can see the half trend better. See, this is a line also showing you the trend being what? Bearish and bullish. So we're bullish here, and then you get the green arrow. And this green arrow is an indicator telling you can get in for a buy. If it was red, it's telling you, hey, get in for a sell. And you'll see it spot on, right? Down arrow, line up with this candle. The close of this candle, you can get in for a sell. Up arrow, indicator close with the close of this candle, you can get in for a buy, okay? But I just don't go off of that. That's not enough, okay? And I don't base my strategy off of that. I'm using this as extra, right? So combined with this, when I get a half trend indicator and the candle closes above the Whole Sweet, that's confirmation. That's one confirmation I use for letting me know, okay, I can get in this trade. That's confirmation number one. Well, that's confirmation number two. My strategy, my break and retest, and this fall on all of my parameters, that's confirmation number one. This is confirmation number 2. Confirmation number 3 is I use a smooth moving average. Okay, this is the 21, the 50, and the 200. All right, the smooth moving average is called the 3SMMA. Shout out to the Moving Average YouTube channel, as this is who I learned about the smooth moving average from. Right, so I come here, and if you look at this here, guys, this is the 21, the 50, and the 200. Now, I'm not going to go into, I do another video on moving averages. So under normal circumstances, right, I would not have gotten in this trade possibly with the moving averages where price is under the moving averages and whatnot. But I enter off of the 15, and for a buy, I want price to be above the moving averages, right? At least above 2 of my moving averages, because if it's above the 21 and the 50, I know it's going to head towards the 200. But if it's above the 21, the 50, and the 200, that's even more confirmation for me to say, hey, now the moving averages is underpriced, right? That means if moving averages are underpriced, we're buying. If moving averages above price, we're selling. So if I drop down to the 15-minute chart, as you'll see here, let's go over here to where I took this trade. It lines up with my confirmations, right? So on the 15-minute chart, I come over here. 745, this is around where I got in at, right? My break, my retest, and my rejection. And I'll go over that one more time in a second. Right here, it closed. Boom. Look at this. It's above the 21, it's above the 50, and it closed above the 200. That's indicator for me to say, okay, that's a third confirmation for me to get in on a buy. All right. So fourth indicator I like to use, guys, go back to my 1 hour really quickly. Again, this is actually an indicator created by the Moving Average channel, already on the Moving Average. Fourth indicator I like to use, guys, is called the 3LS, which is the 3-line strike. 3-line strike meaning is indicative of where price is going into a reversal. You can see here after this downtrend, right? Red candle, red candle, red candle, boom. You had this massive bullish engulfing candle, close right here. The arrow popped up letting you know this is where you can get in for a buy. So that's my fourth confirmation. So I have my break and retest strategy. Confirmation number 1, confirmation number 2, I had is the whole suite and the half trend combined called the double H. Confirmation number 3 is the smooth moving averages. Confirmation number 4 is the 3-line strike. And my fifth confirmation, guys, is I use the RSI. Right here, okay? You look at the RSI, the 50, right here. Again, courtesy of the Moving Average channel. This is just work. This is work like a perfect storm for me. So if you look right here where I got in on this trade at, let's go look at this. Go down to the 15-minute chart again, right? Even on the 15-minute chart, look right here, even more confirmation from the 3-line strike right here, boom. And then if you look at on the 50 here, guys, where I got in about right here, if I'm getting, when I'm using the RSI, if the 50, if price is above the 50, that's indicator for me I'm getting in for a buy. If it's below the 50, that's indicative of a sell. So where I got in right here, price not only was it above, right here, not only was it above the 50, right? It was above the 50 and it was pointing upward, making even more of a stronger indication right in there, right? So that was my my fifth confirmation. So again, my break and retest alone is good enough for me to have solid trades, but to get even higher confirmation, to beef things up, guys, and to just make it an even more solid strategy, I use these indicators as icing on the cake. So let me take these off, guys. I did not discuss really quickly with my break and retest, what do I look for? Okay, I might have, again, I told you guys, I wait for a 1 hour candle close. If I go back here, excuse me, 1 hour candle close, I got it right here. At 6 a.m., 7 a.m., I'm looking for a retest and a rejection. If I go down here to the 15-minute chart, I'm looking for, starting at the 7 o'clock hour, I'm looking for a retest, which I got it right there, right? 7 a.m. retest, and then now I'm looking for a rejection back bullish for a buy. If it was a sell, I'm looking for a bearish rejection, right? Bullish rejection anywhere right in here, okay? So I got the bullish rejection right in here off the 15-minute, or I could have got it off the 5-minute, get that rejection, and I'm entering. And that was my fifth confirmation. I mean, that's my very first confirmation. So I'm looking for, in a buy, green, red, green, if that's you want to look at the candle colors. A 1 hour green candle close, then a 15-minute red candle for rejection, and then, for retest, and then for rejection, back to the upside on the 15 or the 5-minute, I'm looking for another green candle. And that alone, I'm entering, and I can enter, and then I have the extra confirmations now tapped in with that. So making it, even more dope strategy, right? So sorry about that line on the chart. So what I want to do now, guys, really quickly is show you, I talked about why, I got these markups on here, 1 second. Let me do that. Why I didn't get up there. I told you, I'm trading against the trend, which is like, I normally don't do it, but I know I was able to get this move, and it was a nice move. I know it was coming off this area here, and I had to remember, I was like, I'm not going to get 90 out of this, and let me tell you why. Because, again, guys, being in a bearish trend, the only way I would have got my 90, and it could have, but it rejected right here first time, right? I already closed out 30 pips, and price pulled back down. Now, on the second time it came back up to this area again, right? Came back up to the same area, and what did this create? It didn't break past this area here, okay? So when price came back up to this area right here, now this is a very strong bullish candle, right? This bullish candle closed out, and then after that, price then said, hey, this is going to be a newfound area of resistance, okay? But it's a new resistance, but it is also a lower high, okay? It's also a lower high. Let's look at this. Went up total about, it was about 50 pips it went up about, and it created a lower high, meaning it was not gonna reverse the trend. It was staying with a trend. It was just creating a lower high, and then price then what did after that? It dropped back down and created what? A lower low. Then it came up here and created another. It didn't go as much, as high on the next lower high, because if you look right here, it dropped down very strongly and aggressively, 130 plus pips, as I showed you guys earlier, right? 130 plus pips. It came down, boom. From right here, it was about 115, but still, that's a damn good amount of pips. And then it came up and created another lower high, and then now here we are, close the day almost here on Friday. It's now creating a lower low again. Okay, so this is still a bearish trend. So the other confirmation I had to say, hey, this is not. It retested this area twice. That was enough for me to say, okay, I'm closing this out manually because this is going to continue with the trend. All it was doing was just creating a lower high. Now, I also used Fibonacci as another confirmation to let me know that for price reversals. So I took it, let's just look from here to here. This didn't exist at the time. If you look from here to here, I saw the price came up here, right? And right around this area, I like, obviously 61.8 is a very good, is a strong area, but I like, for me personally, if I'm trading reversals off the 71.8 and the 78.6, that's key area for me. And if you look where price came back up here to this level, and then retested again, this is right between tapping, it literally touched the, if I blow this up, you'll see it literally touched both times the 71.8 line and then tanked shortly after that. Okay, so that was another confirmation for me to say this is about to reverse. So let me get out of here. Now, what would have showed us that this was going to continue and become and do be a reversal right? And then change the trend as well, as if price would have continued to push up to where I would have got that 90 plus pips, and then not wicked, but yet a candle closed up. Even if the candle would have closed right above this area right here, okay, a solid candle close, that would have been an indication that we're now going to possibly get a new higher high, and this was going to potentially start reversing. Okay, that would have been a possible area for where we could reverse, and then it would have had to come and create a higher high above this level. But again, that's neither here nor there. We're focused on what was right here in the present, and as you can see, it did not do that, and price tanked. But I did right here in this area. I closed out 30 pips on my first order, and on my second order, I was up about 10 more pips. So I closed out the second order for about 43, 45 pips or something like that. And I was going for 50. I was like, you know what? I'm gonna just take this 45. I ain't gonna be greedy, and let me get out. And shortly after I did that, a couple hours later, you see what happened. So that was my EURCAD analysis, guys. I hope you all got some value from this. My baby girl checking on me. Love my kids. Hope you all got some value from this, man. Guys, and if you want to learn more about Forex trading, simply go to tradewithed.com. Thanks for your time. I will talk to you guys later.